Hello everyone, in this video I would like to analyze a Mastercard stock. The stock is currently down more than 20% during the last year, but the real question is if it's traded near the fair value and if the business is still a strong business or if it's weakening. For this analysis, I'll be using a moat IQ. The moat IQ is software designed for the business strength and valuation analysis. Mastercard operates one of the largest payment network in the world. The network connects consumers, financial institutions, merchants, government, and businesses worldwide. Their revenue is generated primarily by charging fees to its customers based on the gross dollar volume and the number of transactions routed through its network. There is a secondary value-added services and solutions segment, which covers security, fraud detection, data analytics, consulting, and loyalty program management services. These services create roughly 40% of the total net revenue, and they are charged based on subscriptions or usage fees. Mastercard is able to raise prices because together with Visa they are creating a duopoly and thus facing very little direct competition for its core network payment service. This allows the company to periodically adjust network fees, assessment fees, and routing costs with minimal risk of customer churn. The value-added services are being aggressively expanded, and this allows Mastercard to upsell high-margin security data and fraud prevention tools, effectively increasing the revenue yield per transaction without explicitly raising base network fees. Mastercard is known as inflation hedge because it charges a percentage of the gross dollar volume on transaction, and its revenue does naturally scale with the inflation. During the recession, the consumer spending are typically shrinking, and this negatively impact transaction volumes of the Mastercard. On the other hand, the massive portion of the volume comes from the non-discretionary everyday purchase, providing highly resilient revenue for the Mastercard revenue. Overall, Mastercard, with its payment network services and value-added services and solutions, it creates a well-diversified business. The primary competitive advantage of Mastercard is created by network effect. As more consumers carry Mastercards, more merchants are compelled to accept them, which in turn attract more issuing financial institutions. On top of it, Mastercard's value-added services and solutions segment is providing critical security, fraud detection, digital authentication, and data analytics to banks and merchants. And for these institutions, it is extremely difficult to rip out and replace these integrated systems. Because the VAS segment is rapidly growing, we think that the overall moat trajectory is widening. There are four key performance indicators which investors should follow. The first one is gross dollar volume, and this corresponds to the total volume of cash spent by the Mastercards. As you can see, this volume is growing every quarter, so everything is fine here. The second one is switch transactions. This is the total number of transactions that are going through the Mastercard network. And again, very strong trend, growing, nothing bad. The third one is value-added services revenue, and as we discussed already, the revenue in this segment is growing very quickly. The last one is the number of Mastercards issued, um, and there is slight warning because there is a little bit of slowdown in the last quarter, and this is something what investors should follow in the next quarters. Company's net income statement is pretty strong. The revenue was growing around 16% in the last 5 years on average, and the analysts are estimating similar growth around 13% in the future in the next couple of years. The same is true for the net income statements. So you can see that there was a growth above 15%, and the analysts are estimating growth above 15% in the next 4 years. The similar trend can be seen in the free cash flow and also in the earning per share, where we see that the growth is around 15% in the next couple of years. When we are looking to the Mastercard balance sheet, some investors can be concerned about the debt, especially debt to equity ratio. But this is caused by Mastercard's aggressive stock repurchase program, which decrease the equity. So I think that the overall debt is reasonable with the respect to the free cash flow which is company generating. That said, Mastercard is returning a lot of capital to the shareholders via the share buyback program, as we discussed, but also via the dividend, which has average growth rate during the last 5 years around 90%. Let's have a look on the Mastercard valuation. Our model predicts the fair value around $570, which implies return to the investor around 12% with respect to the current stock price $470. Our assumption is that the revenue will grow 12%. This is in alignment with the historical performance and with the analyst estimates. The revenue after 5 years, the revenue will slow down to 8%. The free cash flow margins are estimated around 50%, which is something where the Mastercard is now. The terminal multiple, we are using 20 because the Mastercard is very good company. When we also check the historic evaluation, we can see that we are now at the minimum during the last 5 years, and this is both for the free cash flow, price to free cash flow or price to earnings. I think that the Mastercard is now excellent business traded near the fair value with reasonable margin of safety, and for me it is a reasonable entry point to increase my position. I would like to say that this is not financial advice and every investor should do its analysis on its own. What we are using here is a moat IQ analysis tool, and I would like to say that this tool is now free for the next 14 days. And the only thing which we would like to have is some feedback from you, how you like it or not. Thank you very much, and see you in the next video.